every town, right? Every main street had a community bank, had a credit union. I said, unlike big banks, like people love them, love them. The customer experience is great up to a point. When things get digital, the wheels fall off. So Lifesaver actually started as a macro in Excel. It was just, my now co-founders, Corey and I, trying to find the best bank for us. And then we started learning that all of our friends are financially illiterate. Great indie movie that nobody watches until it gets on Netflix, right? And that's how community banks and credit unions are. They're like these great indie financial institutions that most people don't know about. Hey, like Hunter, maybe you're 22 and a student. We've noticed you have a regular Bank of America account. They're probably going to show you a student no-fee account from a credit union or a community bank. 78% of Americans have the same problem.
Yeah.
A lot of us are living paycheck to paycheck. One unexpected expense from some serious financial problems. Like a lot of kids, you work for your parents this summer and don't get paid, but you learn some stuff. Literally start from scratch when they immigrated to this country, left everything, and you get the sense that you have to outperform because you had it so much better than they did. Thing for like fancy pens.
Yeah.
And I had no concept of that, but I would sell them at school.
Yeah. Fancy adult pens?
Yeah, like fancy adult pens to like a little school friend.
For like $1?
For definitely less than $5.
And the pen's probably worth like $100.
Exactly.
Did your dad yell at you? Or
he worked a lot, so he didn't know. It took a while for him to notice. But when he did, he was like, where the hell are all my pens?
Oh my God. Oh my gosh.
So that was a lot of karate. I really just wanted to break a board.
Yeah.
And once I broke the board, I was like, okay, I'm kind of over karate. I was supposed to do just a semester abroad at the Sorbonne, ended up sticking around for...
No, the Sorbonne is...
In Paris.
So you go to Paris with school.
Go to Paris, actually, I really wanted to be a writer.
Yeah.
And
just like Hemingway in Paris.
Right, like everybody, I was trying to think of came to a conclusion because the economy collapsed. I ended up actually working for the Obama campaign in Miami.
Yeah.
And then eventually...
What'd you do for them?
I was a field officer, actually. I just kind of went to go finish my undergrad degree. So I actually applied, got into NYU, really a good fit, into Columbia, and I thought I was going to go into public policy. Yeah. Got a summer job, and that completely derailed the whole plan.
What was the summer job?
The summer job was actually as a research assistant at an ed tech company that was founded and funded by two hedge fund portfolio managers. The chief compliance officer of the hedge fund left with about 45 days before Dodd-Frank hits. They offered me assistant compliance manager role to chief compliance officer in about less than a year. Millennial kind of had automated my job to the point that I was pretty bored.
Yeah.
Specific demographic, which is like Black and brown America, tend to put all their wealth in their homes. And not being able to list your home anymore essentially made these people unable to invest in the kind of funds that I was working at. $7,500 for that one MBA course. That was pretty painful. My now co-founder and CTO told me like, dude, just give it a try. Let's just try and solve this problem.
Here's a question. Did you meet him at Columbia Business School or did you meet him at Columbia undergrad?
Columbia undergrad in a writing class. Yeah. In total, 10,497 institutions in this country that all have less than $10 billion in assets.
Yeah. They haven't been all gobbled up by bigger corporations.
They're still getting gobbled.
What's the difference between a credit union and a community bank?
Absolutely.
I genuinely don't know.
A lot of people don't. It's a great question, Hunter. So high level difference is that credit unions are nonprofit institutions where community banks or credit unions started looking into them and realized like, oh, nobody knows about them because they can't afford to market. They don't have the technology to engage with people, but they are burning $100 million in aggregate in technology that doesn't work. Didn't know the difference between a savings account and a checking account.
Right. And what is the difference between savings account and checking account?
The main difference is that you can only take out money 6 times a month from a savings account. You get throttled. If you take out more than that, you're subject to fees. Sure, he got pretty bored and he just started to code online. Yeah. Just taught himself how to do it. And he was basically like, you know what? I think I can build you this MVP. So that's sort of when it started.
Did you have to sign up the banks first or did you have to get users first?
We got users first.
That hurdle.
Well, there are so many of these institutions, we started figuring out a rubric of like how to determine a forward-thinking bank. Yeah. Really competing with anybody, so competing with a peer was better than where they were today. There's been this trend, particularly mostly in credit unions, where they have overdraft protection accounts. a list of about 75 institutions that
Sorry.
Yeah, go ahead.
Did you drive to 75 institutions?
No. You hang out in the FDIC's data repository to figure them out.
And then you call them.
Well, you do a lot of due diligence on them first, and then then you go visit them. So even right now, it's still the most used part of our app is the budgeting and savings module.
Right.
There's like another reason why we love community banks and credit unions. They offer things like credit builder loans.
How does Lifesaver survive if it's free?
Well, we make money off banks and credit unions.
So does credit union pay you a monthly fee?
Yep, subscription-based model, because at the end of the day, what we're doing is that we're just a simple enterprise SaaS solution for them.
Like if somebody's in New York, would they qualify for a Fresno bank? Are you doing kind of interstate, are you seeing interstate
Yes,
kind
we
of
are.
things happening?
So that's what's amazing, I think, about Lifesaver, which is essentially, if you put all these institutions on a platform, they can perform the full capacity of their charters. As a woman, I think, we are familiar with the statistics, right, of fundraising and how much women raise compared to men out them, and we realize that a lot of them are gig workers. And you can't use Venmo to pay for a doctor bill or a mechanic. And so the idea is to get these people in a community bank or credit union.
How do you think you've grown as a CEO?
As a CEO, definitely way more resilient. One of the things that I don't know if this is about growth or just learning to adapt, right, is you gotta roll with the punches. And you gotta, top 3 things that I've learned is get to know as fast as possible. That way you don't waste your time. 2, if someone's not a good fit, they're not a good fit and you move on and that's it.
Yeah.
And 3 is sort of like, this is a roller coaster. So even if you have a good day, could be bad. Have a bad day, could turn out good. And you just gotta, you gotta roll with the punches.
Exactly.
Yeah.
That's fantastic. I'm so inspired.
Is that I do not have trouble getting up out of bed.
Yeah.
In fact, I'm like, just so motivated. I mean, I've had moments where I've like honestly cried reading people's like reviews of our app and how, somebody who's never saved before is finally saving, or somebody who was like on the fence about getting.
Yeah.
These are not mutually exclusive things, and I'm really long on the thesis of that we need to help everyday people.
Yeah. Welcome to Startup Hunter. I am here with Karen Rios, and she's the CEO of this really interesting company called Lifesaver, which is
A universal banking front end for community banks and credit unions.
Okay, so on this show, we go all the way back. And in the first half, I want to know everything that sort of formed you in an entrepreneurial sense. And then in the second half, we'll get into Lifesaver.
Okay.
So Karen, where were you born and what did your parents do?
Born and raised in Miami, Florida. My mom was a homemaker, stay-at-home mom. Mom was a homemaker. Dad mostly ran a private security company in Miami for many years.
Was he the operator and the owner of that company?
For a long time, he was just a security guard, and he tried his hand at that. Was successful for a couple of years, and then enough to get them to retire.
That's fantastic.
Yeah.
What I'm not clear on, was he the owner?
Toward the end, yeah, toward the end.
So you got a little taste of the entrepreneurial hustle you must have by osmosis, seeing your dad run a business.
Yeah, and I mean, considering that it's South Florida, their language skills weren't necessarily there. They didn't have to be. Definitely got a taste in other ways than one, and more than one, like helping them with some paperwork as a kid. Like a lot of kids, you work for your parents this summer and don't get paid, but you learn some stuff.
What do you think rubbed off on you as far as running a business from watching your father run his?
You know what? I would say some of the things that rubbed off on me were not even so much business related as this idea of like, you can do anything, right? So there were these 2 people who had to literally start from scratch when they immigrated to this country, left everything. And you get the sense that you have to outperform because you had it so much better than they did.
Right. So you got a real perspective of not resting on your laurels.
Yeah.
And an understanding of maybe how good we have it here.
Exactly, and the responsibility to give back and to do more, right?
Yeah. So here's another angle, different angle. Let's go through the park.
Yeah.
5. Safety is the number one priority, but I think we got it.
You know what? I think we got it too.
We get it. Well, let's get the flat iron. Let's get the view of the flat iron and then go through the park. So we're gonna go this way. And I'm gonna hold it down. See, there's the flat iron.
Oh, nice. Good, nice touch.
So here, let's take it from another angle though.
Sure.
Karen, like, what's the first hustle you can remember as a kid of you doing something entrepreneurial, hustling?
Actually, so my dad had a thing for like fancy pens.
Yeah.
And I had no concept of that, but I would sell them at school.
Yeah. Like fancy adult pens?
Yeah,
at
like
school?
fancy adult pens. Like I might have maybe one time sold a Mont Blanc one in like the 4th grade to like a little school friend.
For like $1?
For definitely less than $5.
And the pen's probably worth like $100.
Exactly.
Did your dad like yell at you? Or your mom?
He worked a lot, so he didn't know. It took a while for him to notice. But when he did, he was like, "Where the hell are all my pens?"
Oh my god! Oh my gosh!
So that was maybe the first taste of entrepreneurship.
So you just saw these pens in his study, and you're like picking them off a tree like they're apples.
If they were in a study, they weren't. They were tucked away in like his top drawer next to his like fancy socks and handkerchiefs. So I kind of knew they had some value.
Yeah. Oh my gosh, this is great. Well, hopefully you can buy him some pens one day.
It's fine. It's now like a cute, funny story, but at the time he was very upset.
Yeah. Okay, so, but what I'm already seeing, and this is a common trend in entrepreneurs, which is you're selling at an early age. So did this trend continue? Did you have other kind of exploits?
No, actually I have no sales background with that
except for the pens.
Except for the pens and around the 3rd and 4th grade. Beside that, I kind of my cut my teeth here in the city working at a hedge fund, at a long short equity fund.
Wait, you're skipping too much.
But never sold anything.
Okay, so you feel like you didn't sell. Okay, here's a different way of looking at it. When I say hustle, it doesn't have to be money changing hands. Were you doing something productive as a child, like maybe organizing a club, or just something where you're taking initiative and leadership?
No, it was mostly a tomboy. I was into sports a lot, so that's I guess a kind of leadership, but not as direct as that. I think the hustle definitely came after high school in various different ways.
So in high school you were studying very hard or not at all?
No, so I'm the youngest of 4 and I've got crazy, super high achieving siblings.
Interesting.
Yes. The one sibling who mostly dropped all of our averages down was the one who got a PhD in 2 years.
Yeah, that's insane.
That is insane, right? Thank you for validating that.
It normally takes 7.
Exactly. So I think for me, I kind of realized that I was not gonna be performing at those levels as my siblings. So I was like the coordinated, like sporty sibling. So I was doing all right, but
Sporty Rios.
Yes, well, yes. I was like a little soccer kid, did a lot of karate, and my studies were fine.
No, in karate, did you get to black belt?
No, I only made it to green.
Yeah.
Yeah, so like, only 2.5 years of karate lessons.
And then you got tired of it and other things took your interest?
If I'm fully honest, I really just wanted to break a board.
Yeah.
And once I broke the board, I was like, okay, I'm kind of over karate.
Yeah, I mean, you saw the goal, you achieved the goal, and then you're like, I have better things to do.
Right, and so I sort of played soccer. I switched up to soccer until college, and that was it. Yeah.
So, where'd you go to university?
So the first time around, actually started at FIU, which is like a commuter college right in Miami. Dropped out of that, and let's see, was supposed to do just a semester abroad at the Sorbonne. Ended up sticking around for.
No, the Sorbonne is
in Paris.
So you go to Paris with school.
Go to Paris, actually.
Yeah.
Because of my brother, because he was like, you can't just drop out of school. He's like, you can have a gap year. So it was supposed to be like a gap semester, learn some French.
Now, was there a scholarship involved? Like, how did you survive?
No. This was actually just the generosity of my older brother and my parents.
Yeah.
And then I stuck around, finished out the semester, really, really loved it, made some friends. At this point in my life, I really wanted to be a writer.
Yeah.
And
just like Hemingway in Paris.
right, like everybody, every I was trying to think of a non-curse word here.
Freaking?
Every naive American in Paris who thinks they're going to be a writer. So I actually made friends with a couple people who were expats teaching English at like just to corporations in France. And so through that, I managed to somewhat support myself, but I hung around for like 3 years.
Wow.
Yeah.
Were you like, did you have actual jobs?
No, because I was like on a student visa and then I was on a tourist visa, so you couldn't technically. So for posterity, we will say that I was not really employed, but figured out a way to sort of make ends meet.
Okay. So I feel a lot of hustle and grit right there. That's what I can surmise. And that's what I'm looking for, and I think that's what investors are looking for. Anyway, so 3 years in Paris.
Yep.
Now, were you studying or simply surviving?
So what's amazing about Paris is like, you know, the College of France is open to the public. So I'd sit in on these amazing lectures about stuff that was like way over my head, but I was mostly surviving.
Yeah.
So mostly writing just crappy little articles on fashion, on food for expats, mostly Americans visiting Paris.
Give me a year, like what year are we talking about?
This is about 2006-07.
Right, so
Yeah.
right before the financial crash.
Exactly, right before the sky literally falls, right?
So how did Paris come to a conclusion?
Paris came to a conclusion because the economy collapsed.
Uh-huh.
And my brother and my dad were like, you need to come home. Like, this is not doable anymore.
Yeah.
And so returned back home in about May 2008.
Hold on. Let's just hang up. Yeah, go ahead.
After that, I ended up actually working for the Obama campaign in Miami.
Yeah.
And then eventually...
And what'd you do for them?
I was a field officer, actually.
Yeah, so you were knocking on doors?
I was not so much knocking on doors, I was managing the kids who were knocking on doors.
Right, and that's incredible.
Yeah, no, it was amazing. It was, you know anything about Little Havana, which is a very Cuban-American neighborhood in South Florida.
That's Pitbull's territory.
Exactly, Mr. Worldwide. It is incredibly red, and that district went blue for the first time in a generation.
Wow.
So that was pretty cool to be a part of that.
So how long were you on the campaign?
So I started in about June, and then it concluded in November.
Right.
So after that, I just kind of went to go finish my undergrad degree. So I actually applied, got into NYU.
Oh, cool.
And December of that year was actually when I moved to New York City.
And what degree did you get?
So I actually ended up transferring out of NYU. I wasn't really a good fit into Columbia, and I thought I was going to go into public policy.
Yeah.
So that was initially the plan. It was U.S. history with a focus in immigration.
Uh-huh.
And got a summer job, and that completely derailed the whole plan.
What was the summer job?
The summer job was actually as a research assistant at an ed tech company that was founded and funded by two hedge fund portfolio managers.
What's the name of this ed tech company?
Well, it no longer exists, but at the time it was called NetText.
Okay.
And so what they were trying to do was, you know, I don't know if you remember, but this is the point of like Common Cores coming online and all that jazz. And the idea was to replace textbooks and create curriculums that were open sourced based on the Common Core and using sources that were like that were open source entirely.
So this is really interesting. How did NetText eventually, end?
NetText, I couldn't really tell you because it ended. When it ended, I'd already made the switch from the ed tech side to the hedge fund side.
Okay.
So I wasn't really on the day-to-day anymore on what happened with NetText.
So you moved from this ed tech to hedge funds.
Yep.
And did you not graduate school?
So I had gotten my undergrad.
Okay.
Yeah, I was in the process of, studying for the GRE.
Hold on.
When this happens.
Yeah.
So what happened was that the chief compliance officer of the hedge fund left with about 45 days before Dodd-Frank hits.
Right, so this is right in the midst of the financial crisis.
Exactly. No, a little bit after. It's like 2012. summer of 2012. And they knew that I wanted to do public policy. They knew that it's just supposed to be a summer job, but they asked me if I wanted to help for this whole Dodd-Frank thing, which I didn't know about at the time. And so they offered me assistant compliance manager role.
Yeah. So that makes a lot of sense to me because the guy who left was probably way senior and knew that like it was a sinking ship or possibly a sinking ship. Whereas you're like, oh my gosh, all this experience. Like, yes.
Yeah, to be completely honest, it was kind of a function of like, my student loans are due.
Yeah.
And I really did think I could study for I still thought it was going to be a short-term situation. And I was like, well, GRE is not till May, it keeps me employed. But ultimately, I ended up going from assistant compliance manager, whatever it was, to chief compliance officer in about less than a year.
And so the company survived the financial crisis.
Oh no, they were actually one of the few hedge funds that not only survived, but made up returns and provided liquidity for everybody during that period.
So clearly they hedged their bets correctly.
Yeah, I mean, it helps that these two guys were really great and they long short equity, so they never really messed around with anything too complicated.
Right.
So they stuck with what they knew, and they did really well.
Like common sense.
Yep.
And they didn't get greedy.
They didn't get greedy.
Which is fundamentally, I think, the root of all financial bubbles.
Right.
So how long were you at this hedge fund?
About 4.5 years all in. Toward the end, I guess being a good millennial, kind of had automated my job to the point that I was pretty bored.
Yeah.
And kind of a couple of things had coalesced for me. So when you are implementing Dodd-Frank, you had to kind of understand the changes. And one of the big changes was that most people could no longer list their homes to be considered a qualified purchaser or an accredited investor. And that change, for the most part, had no effect, except within a very specific demographic, which is like Black and brown America, tend to put all their wealth in their homes. And not being able to list your home anymore essentially made these people unable to invest in the kind of funds that I was working at. And so that was, I think, the beginning of what would be an obsession around financial inclusion and access.
So you're starting to see this pattern at the end of your career. You're also starting to get bored.
Yep.
So is this when Lifesaver started?
So Lifesaver had been a frequent conversation that I'd been having with the guy who's now my co-founder and my CTO. We'd met at Columbia in 2009 or 10. And we'd always stayed in touch, and it was just kind of complaining about our finances. And I just happened to get lucky that I stumbled onto a career and a salary and a bonus that kind of sorted me out. But it was still incredibly difficult to manage your money. And so we'd have these conversations about why is it so hard? Like, why is it that you can find a date, you can get a meal, you can do everything from your phone except figure out your cash?
Yeah.
But Lifesaver really, really didn't start until the summer of 2016. So we talked about it. I'd left this hedge fund role. I was still on the fence about what I wanted to do.
Yeah.
Was considering getting an MBA, ended up playing for one class at Columbia, remembered how bloody expensive that was.
Exactly. There's so many people who just say, like, the title is not, if you can't afford it, it's not worth it.
Right.
It's only worth it if you're if it's a small percentage of your funds.
And there was this thing that I to be completely honest with you, I wasn't even sure if I wanted to work in finance anymore. It wasn't something that I'd planned to do in the first place. And I did sort of come from this place of how do you affect change, right? That was why I was interested in public policy to begin with.
Sure.
And then I think it was a combination of things. Paying that $7,500 for that one MBA course, that was pretty painful.
Yeah, a lot.
And having my now co-founder and CTO tell me dude, just give it a try. Let's just try and solve this problem.
Here's the question. Did you meet him at Columbia Business School or did you meet him at Columbia undergrad?
Columbia undergrad in a writing class.
Yeah.
Yeah. So
So you see that you can meet co-founders, not a business school.
yeah, no, 100%. And I think the fact that he's a writer is really interesting, in that, like, you know, you come in with a very different way of how you solve a problem.
Yeah. Oh, absolutely. I think having a diversity of opinions and different ways of coming about it is so good.
Yeah.
So your mind is starting to percolate around, you know, these issues of how did you put it?
You know, financial inclusion, access, why we bank where we do, who gets to manage people's money and why, right?
Yeah.
Why we make the financial choices we make.
Yeah.
And then that started a whole thing where I discovered community banks and credit unions.
Okay, so talk about that, because I think they're really interesting. I've tried lots of different banks.
Yeah. So there used to be a time, which I'm sure you and I don't, well, way before you and I, where like every town, right? Every main street had a community bank, had a credit union.
Indeed.
And that was like your first relationship with, your first experience with finance, period, the end. And one of the things that blew my mind really early on was just how many of them there are. So just to give you a sense, there's like, in total, 10,497 institutions in this country that all have less than $10 billion in assets.
Yeah, are these called quote unquote mid-sized banks or small banks?
These are by the FDIC community banks and
Community
credit
banks.
banks and credit unions. Yeah.
And yet they haven't been all gobbled up by bigger corporations.
They're still getting gobbled.
Yeah.
So to give you a sense, there's about just over 5,000 community banks and credit unions right now. In like 1999, there was like 18,000.
Yeah, so there's consolidation
Yeah,
happening.
a lot of consolidation happening, and they're getting bigger. But what's really amazing about them is that, unlike big banks, like, people love them, like love them.
Yeah, because like a big bank, you know, has this corporate structure, and you're not going to talk to the same person every time, and they have really harsh fees. I don't know if the
fees.
I don't know if the monthly fees are the same in community
Nope.
banks.
So a credit union, for example, if you're a credit union member, on average, you're going to save, I think it's over $500.
Question.
Yeah.
What's the difference between a credit union and a community bank?
Absolutely.
I genuinely don't know.
A lot of people don't. It's a great question, Hunter. So high-level difference is that credit unions are nonprofit. So just to clarify that, that's not to say that they're a non-for-profit, like the Red Cross or something. They're owned by their members. So if you're a credit union person, you own a tiny stake in that credit union.
Interesting. So what's the risk? You know, what's the liability of a credit union? Because it sounds like a, you know, fantasy. It sounds like utopia, but I'm sure in reality that it's not perfect.
Right. There's trade-offs. So that's a great follow-up question. The customer experience is great up to a point. When things get digital, the wheels fall off. So that's the problem.
Because these small banks don't have the resources to
Exactly.
participate in the 21st century economy.
So most of us have to make a choice between like great high-touch service or an amazing digital experience.
Yeah.
And most of us end up making the compromise for a digital experience.
So was there a particular community bank or credit union that like you interacted with that shaped that, you know, was formative for you?
So I happened to, about 5 years ago, move up to Harlem. And one of these things blew my mind. And I happened to live around the corner from a B Corp bank called Spring Bank.
Wow.
I didn't know there was such a thing as a B Corp bank.
Me neither.
And the other thing that blew my mind was that Spring Bank, this bank, is actually headquartered in the Bronx. And it was the first bank to open in the Bronx since like 1978. And it opened in 2007.
Yeah.
And so for me, coming off this sort of obsession already with like financial access and inclusion, blew my mind that in one of the bigger boroughs of New York City, a new bank hadn't opened in a generation.
Right.
And it's also one of the poorest boroughs in the city. I mean, if you want to talk about the Bronx in terms of like demographics, it's another part of it's completely different than the rest of the island.
Right.
Yeah. In terms of poverty rates, underbanked rates, access to food, access to capital, it is closer to the emerging markets or developing world than it is the rest of America.
Indeed.
Yeah.
It's almost as diverse as Queens.
Almost as diverse as Queens, that's right. Yeah. Are you from Queens?
I live in Queens. I was born on this island.
Oh, nice.
But I live in Queens now.
Okay. Whereabouts?
Sunnyside.
Oh, nice. All right. So you got great food and a backyard.
And a backyard. And I'm very close to Brooklyn, which is where I spend a lot of time.
Like a good millennial.
Exactly. This is really interesting. So this Spring Bank, now did you become a member of Spring Bank?
So actually, it's our business banking partner, actually.
Did you start, did that happen before you started Lifesaver or after?
After.
So I really want to know about the formation, how did Lifesaver sort of
Start?
Yeah.
So Lifesaver actually started as a macro in Excel. It was just, my now co-founders, Corey and I, trying to find the best bank for us.
Yeah.
And so we put together this kind of janky little database in Excel, wrote together a macro, had come up with a way of sort of assessing somebody's profile to best match them with a financial product and provider. We did that, and that was pretty easy. But in the process of figuring that out, we stumbled upon a just incredibly lucrative opportunity.
Okay, so talk about that.
Yeah. So, in figuring out that there was first of all, 97% of the institutions were community banks or credit unions, started looking into them and realized nobody knows about them because they can't afford to market. They don't have the technology to engage with people, but they are burning $100 million in aggregate in technology that doesn't work.
So all these community banks all across the country are doing these tech experiments because they realize they need mobile apps and basic tech to survive and get to millennials.
Yeah.
But they're not successful. So you're seeing a trend.
Seeing a massive trend that really, the further you go into this rabbit hole, the more fascinating it is. So essentially, all these community banks and credit unions are running on 50-year-old technology.
Yeah.
It has just been people develop wrappers on top of it, but essentially it is just 50-year-old crappy technology built on cobalt that hasn't really changed. But nonetheless,
Cobalt is an old,
super
Cobalt is an old programming language. Oh my gosh.
It's ancient. But real talk, it's still built on this. There are a ton of a very few amount of cobalt engineers still around, and they're making a killing. Right now.
Job security.
Exactly.
And then the same in the airline industry with Fortran.
Yep, exactly. And so what we realized was that to compensate for their crappy technology, they were just burning so much money on marketing.
Yeah.
But they also don't have data. So it was essentially they're just burning money on both ends.
Yeah. So you identify this trend. What did you do about it?
Well, so we started talking to community bankers and credit union people.
But was your idea to we're going to start a company, or were you just validating it first? Or?
Well, no, we kind of realized there was a company to start there.
Okay.
And that was a function of talking to a lot of our friends. We're like, hey, so we did this thing. Would you test it out for us? And then we started learning that all of our friends are financially illiterate.
Okay.
Brilliant people who were literally designing the Second Avenue subway for you didn't know the difference between a savings account and a checking account.
Right. And what is the difference between savings account and checking account?
The main difference is that you can only take out money 6 times a month from a savings account. You get throttled. If you take out more than that, you're subject to fees. But a checking account, it's a current account, so you can take it out whenever you want.
Right. It's the whole point of it is to do business on.
Exactly.
So you put this out to your friends.
Yep.
Now, did you just go head first and make an app, or?
So essentially what happened was that, Corey had learned how to code on his spare time. He'd been working as a sort of marketing manager and database person for Columbia University Press. And he was the guy who would travel around the country to conferences with a bunch of academics.
Let's go this way.
And during those adventures, he got pretty bored and he just started to code online.
Yeah.
Just taught himself how to do it. And he was basically like, you know what? I think I can build you this MVP. So that's sort of when it started. Yeah. And I was doing the desk research. He was working on the MVP. And initially he thought it was, he was just going to do this and I'd find another engineer and a co-founder, and it just kind of didn't happen. He built the MVP. We started shopping it around to community banks and credit unions just to sort of get a sense of what their pain points were, if they'd be into it.
How long did the MVP take to make?
I think it took him about 90 days or so, but he was, well, maybe a little bit more, closer to 4 months perhaps.
That's not terrible.
He was working another full-time job.
And considering he's never really done this before, that's really not that bad.
Right, so it was it's pretty quick enough that I was sort of like, oh, this is a lot faster. What if we add a couple things here, add a couple things there, and then we launched it in public beta, and then it just kept going.
Now it's no longer minimal.
Exactly. Then it started becoming a thing, and we launched it live, the proper alpha version about 9 months ago.
Okay, wow.
Yeah.
Were you getting pilots before you launched it? Were you getting banks to sign on? Like, talk about sort of that process.
So we kind of knew that banks needed this stuff.
Sure, but
on that side, what we couldn't figure out and really wanted to test was, can we get people to care? And that's really what we spent most of our time on.
To pay?
Not to pay, because we, again, financial access and inclusion, I think if you put a dollar in front of something like that, you've created a barrier for a lot of people who need it. But we just wanted to see if we could validate our assumptions, which was essentially, one, people want an easier way to figure out what to do with their money. Two, people want a centralized place to manage all their money. And three, if people knew about community banks and credit unions, they might be likely to switch.
Yeah.
So it took us a couple different iterations.
Yeah. But nuts and bolts.
Yeah.
Like, I want to understand really how it took off. So, did you have to sign up the banks first, or did you have to get users first?
We got users first.
So you got a whole bunch of users.
Yeah.
And then was there one bank that sort of said yes? Were there a lot of no's from banks?
There was a lot of, we like this, but we don't know how we feel about being on a platform next to our competitors.
Yeah. Okay, so there's that. So there's that hurdle. So
that hurdle.
How did you overcome that hurdle?
Well, there are so many of these institutions. We started figuring out a rubric of like how to determine a forward-thinking bank.
Yeah.
And then we started figuring out patterns and who was the right bank to talk to. And it was banks that realized that, right now they weren't really competing with anybody. So competing with a peer was better than where they were today.
So you sort of make this justification, this like mind trick, this great CEO sales spin. And did it work?
Yeah, I mean, I don't even think it's that much spin. My analogy is sort of like the great indie movie that nobody watches until it gets on Netflix, right? And that's how community banks and credit unions are. They're like these great indie financial institutions that most people don't know about.
So was it like 100 banks all at once? Like?
No, we became very strategic about it. Partially because, look, most of our users have been burned at some point of their lives by the big providers. So we had to make overdraft fees. It's just not a good fit. And so for us, it was sort of curating exactly what the right banks were.
And does a community bank have overdraft fees?
Yeah, they do. Some credit unions do as well. Some of them don't. And so
it's so annoying to me. It's like, why can't it just be like, when there's no money in my account, just don't charge it. Don't charge me an overdraft. Like, don't charge it. Let me know.
Yep.
Let me put money in it, and then, instead of charge me $35 5 times in a row,
So one of the things that I learned in this thing was, particularly for the smaller community bank or credit union, this is why they'll tend to have overdraft protection. It's actually really expensive for them when you overdraft. They end up eating more than what it costs you to overdraft. So there's been this trend, particularly mostly in credit unions, where they have overdraft protection accounts.
Yeah.
And that's just so that they can continue to kind of like provide amazing dividends for their members.
So that's really interesting. Now, getting back to the start of Lifesaver.
Yeah.
So was it just like 100 companies all at once that you said you got really strategic?
Yeah. So no, much smaller. It was about, we looked at the tri-state area and we came up with a list of about 75 institutions that
Sorry.
Yeah, go ahead.
Did you drive to 75 institutions?
No. You hang out in the FDIC's data repository to figure them out.
And then you call them?
Well, you do a lot of due diligence on them first. And then, then you go visit them.
So were there any banks that you disqualified because of your due diligence?
Yes, there were a couple. And that was a function of, you look at how leveraged they are, how likely they are to get merged and with who. What's really interesting is that the consolidation is very different credit union to community bank. So CUNA, which is the organization that oversees all the credit unions in the US, really loves it when branches stay open because they don't want to have to pay the insurance on a closure. The FDIC kind of doesn't really take a position on it. So if branches close, branches close. And so it becomes really interesting in a consolidation environment. A credit union tends to succeed. So essentially, when community credit unions merge, they tend to increase their footprint and their membership profiles of whoever their merging partner is.
Yeah.
So they get an increase in counties, they get an increase in the different people who can apply. They actually become more diverse and healthier as opposed to community banks, they just close.
So you strategically map out 75 banks. Did you call them up one by one?
No. So what really was really cool is that we had at that point, not a ton, but a decent sized organic user base. So we'd be like, hey, our users are banking with you. We really think that, we should have a conversation, help you cross-sell products and engage more customers. And so that for us was actually the best way to go from cold email to meeting.
Right, so it's the same with VCs. It's like, I've raised a little bit of money, you should join our round.
Right. Yeah, I got some early commitments, yeah.
Here's what I want to know. When you had a pool of users and no banks, how did you make that argument to get to first bank?
So one of the things that Corey was really great about, because again, we were trying to solve our own problems. So one of the things that he first developed was a way to make him more accountable with his spending and his budgets. So even right now, it's still the most used part of our app is the budgeting and savings module.
Right.
So people were coming on to Lifesaver for that, even though we had some banks that we were pushing people toward, but we couldn't dynamically get you to open an account. Right, like Hunter's on Lifesaver, and maybe you really like Amalgamated Bank, but our pipes weren't hooked up to Amalgamated Bank, so you would have to go to their website and do all the heavy lifting yourself. Notice that some people converted from BOA or Chase to small community bank or credit union.
So let me understand this. Your app, somebody has BOA, right? They come into your app, they came into your app, and then you present them with a list of community banks. Right,
there's a small rubric of onboarding questions that we ask you. And from that we determine, hey, Hunter, maybe you're 22 and a student. We've noticed you have a regular Bank of America account. They're probably going to show you a student no-fee account from a credit union or a community bank. And even when we couldn't dynamically get people to switch, we realized that at least in our first batch of really early users, a good chunk of them were.
So you have a bank switching option, but you also have a personal finance, accountability option.
Yeah,
it's a horrible way of describing it.
Just a budgeting and save, yeah. And that came about from a function of my CTO trying to solve his own problems. And then as we were talking to banks, they kept telling us that their customers needed that.
Yeah.
And they didn't know how to provide that.
Got it.
So we were like, oh, okay. Well, we already have this. And so that was for us another validator.
Yeah, so you solved your own problem, you ate your own dog food.
Yep, did a lot of that.
And it turns out that other people had the same problem.
Turns out that, 78% of Americans have the same problem.
Yeah.
A lot of us are living paycheck to paycheck. And when you say 78%, right, you realize that this is happening across incomes, across education levels. It is literally all of us are related, know somebody, love somebody who is like literally one unexpected expense from some serious financial problems.
Indeed.
Yeah.
Like, I'm getting this cold right now, and I'm definitely eating out more than cooking. And these New York meals are $20 a pop.
Yes, they are. I mean, let's be real. Like the average coffee in New York City costs you what? $6 at least?
So in order to survive here, if you're not mega rich, you need to be so nimble and so budgeted and so on point. Otherwise, you're not going to survive here.
Or you do what a lot of people are doing, which is just like hang yourself with credit.
Right, which is really bad.
Yeah, like really bad. But I think the average American's got $8,700 in credit card debt is the number. Yeah.
It's insane.
It is actually insane.
So what does Lifesaver have to do with credit? Do you have a credit, like get yourself out of debt tool?
So thankfully, here's like another reason why we love community banks and credit unions. They offer things like credit builder loans. So it's a loan that essentially it's a loan because of the nomenclature, but you can't default on it.
Okay, but go ahead.
So essentially, bank hunter.
Don't call me bank.
So, XYZ Bank, they essentially have a credit building loan option, which works like this. It's a small loan, so it's like $1,200 or $2,500 max. And essentially what it is that I have to provide the entire loan amount first, or in small chunks throughout the year. They keep the principal in a savings account, and they will release the funds once you paid off the full amount.
Well, here's the thing. I mean, credit card is going to charge you like 35% a month, and that's like impossible to get out of.
Right.
Whereas a loan is what percent a month?
Oh, these are like 4.5%.
Right. So it's like it's like
crazy low.
10 times cheaper to do that, to get yourself out of credit card debt, than it is to just stay in credit. So is it literally a lack of education? Are there all these people with $8,600 in debt in America out there, and they simply don't know that it's literally a matter of going on the Lifesaver and converting your debt into a loan?
Well, these loans, the ones that I was talking about, are actually for the low, like no file or light file credit people.
Okay, what's that?
So essentially it's like, you're 20 years old and you've never had credit before in your life.
Got it.
Or you had, you're 28 and in your early 20s, you had a really messed up relationship with a credit card and your credit's damaged. So these are more for people looking to establish their credit or repair their credit. That American who already has $8,700 in debt might need this product to repair their credit, but has already accessed credit. So these are for people who aren't even there yet.
So let me come at it from a different angle.
Sure.
So we sort of did this story of Lifesaver. We sort of know that, you had a pool of users and a pool of banks, and it's picked up some steam.
Yeah.
What are the top 3 reasons that people say they like the app for?
So I think the top 3 reasons that we've heard from our users is they trust it.
Okay.
From a lot of user feedback and research that we've done, people feel that they can't trust whoever they have financial relationships with. So we're not even sure if it's a function of the fact that Lifesaver's on someone's phone,
I can hear you from wherever.
or if it's the fact that we're connecting them with institutions that are in their area that have products that people need. And I would say the other thing that people love about Lifesaver is that it's free.
Yeah.
So trust, convenience, and the fact that it's free.
So that gets on to another topic, which is from a different angle, which is how does Lifesaver survive if it's free?
Well, we make money off banks and credit unions.
So does credit union pay you a monthly fee?
Yep, subscription-based model, because at the end of the day, what we're doing is that we're just a simple enterprise SaaS solution for them.
Yeah.
With a consumer-facing component. But because we believe in financial inclusion, we keep it free for people, so that anyone can find their perfect bank. And sometimes that person who's looking for a perfect bank might not have a relationship with a bank today.
So was your app, were you charging banks nothing at first to like get started?
At first, we were simply trying to figure out, hey, does this idea really have whales behind it, or do we have to go back to corporate?
But were you charging banks from day one?
Nope.
So when you did turn the lever and you said, okay, we're charging, did a lot of banks drop out?
We did call some banks from our platform, but at the same time, we had a big light bulb moment, which was essentially when we were ending the freemium and really talking to banks about paid pilots. One bank was like, look, your platform's awesome, but if your volumes ever pick up, we cannot be on your platform. Because they were manually inputting all these new deposits and all these new customers we were sending to them.
Okay, so how'd you solve that, or you chose not to solve it?
No, we solved that by realizing that we had to cut the institution out of the equation entirely.
Meaning?
Meaning we had to integrate with their back-end core providers.
So what I'm hearing now from, there's there's two interesting things here. From a VC's perspective, a VC doesn't have, who's sort of talking themselves out of investing in your company, would say something along the lines of, oh, your process of doing that is not scalable. You're doing too much work, therefore you're not taking the right strategy, therefore I'm not investing in you. However, a different kind of VC would say, you're putting in the hard work, to sort of cover 80% of possible situations, which is a great way to get, banks onboarded to you. So I know that was a huge mouthful, but did I make a point? Am I asking a question? I don't know. Take it from here.
So if I heard you correctly, what you're saying is that your approach might scare some VCs or others totally get it, right? Am I close to that?
Right, because you're spending a lot of resources to dig into these legacy systems, which may, get you stuck. But the other end of that argument is you're getting customers because of that. We're
getting customers because of that, and that conversation actually came from, one of our pilot banks. But essentially, I want to give this guy full credit because he's an outlier. He is a Gen X president of a community bank out in California, cut his teeth in microfinancing out in Southeast Asia in the 90s, and kind of had professionally taken that approach to how he wanted to run his bank. And so for him, he's out in Fresno, which, if you don't know, is one of the larger poverty tracts in the US.
Okay.
Also one of the youngest and most entrepreneurial spots in the country, which is to say that it's financially upwardly mobile. And he had just switched core providers because he was a bit constrained by his old provider, but he didn't want to jump the $3 to $5 million and 18 months for a mobile app.
Right.
Because, the dude's like 45 and he's like, I hang out on the internet. I know that nobody uses these things. And for us, it just doesn't make sense.
And you're not charging $3 to $5 million?
No, we're not. And so he was like, hey, if you guys can acquire customers and they don't come to my branch, let's do it. And so since he had just switched providers, he got us on the phone with one of the cores, and we were actually able to get the entire product team on a call.
Here's something. If somebody's in New York, would they qualify for a Fresno bank? Are you doing kind of interstate? Are you seeing interstate of things happening?
So that's what's amazing, I think, about Lifesaver, which is essentially, if you put all these institutions on a platform, they can perform and compete to the full capacity of their charters. So this one bank that I'm talking about is a nationally chartered bank.
Yeah.
He's got one branch in Fresno, but he could bank anybody.
Yeah.
So what Lifesaver lets him do is that.
Interesting.
Yeah.
So there's your perfect, the market is going to be perfect potentially.
And it's the same for credit unions, right? So some credit unions are chartered statewide, and they might just have branches in like a couple of towns, but there is potentially like up to a couple million people, right, that could be members of that credit union.
So I get a sense now, of what's happening with Lifesaver. You've got some really good budgeting tools, getting people convert from normal banks to from big banks to smaller community or credit unions, what's your biggest challenge right now as a CEO?
As a CEO, well, we're going to start fundraising, which is a trying thing, I think, for any CEO. As a woman, I think, we are familiar with the statistics, right, of fundraising and how much women raise compared to men. And just, how managing that and trying to manage, hitting your own milestones for your company is trying.
Yeah. Are you in full-time fundraising mode right now?
No, right now we are full-time partnerships and sales mode till the end of the year.
Okay.
And probably around MLK weekend, we'll open up our round.
Wow.
Yeah.
So this is really interesting. Now, is it just you and Corey, or do you have other folks?
So we have a couple other folks, not all full-time. We've got a consultant UX researcher, an intern, but we will be bringing on a third full-time member in January.
Interesting. And so yeah, we're close to done.
This is a great walk, by the way, Hunter.
I'm glad you like it.
Yeah.
I'm glad you're feeling better than I do.
You are a trooper. You've been great. I can't even tell you're sick.
I don't feel sick at the moment, but it's just something doesn't feel right. So what did I miss? We've got a little extra time. We've sort of ahead of schedule.
Okay. Well, we've been working on really, really interesting distribution channels.
Talk about that.
Yeah, absolutely. So one of the things that incredibly grateful that I did this year was spend a lot of time doing customer research.
Yeah.
And in that, we found that we needed to listen to our users more. And we really drilled in deep about them, and we realized that a lot of them are gig workers.
Yeah.
And this is just the future, I think, of the country.
Interesting.
Yeah. So now we've started taking very much a community-centric approach that we had earlier, which was us just talking to community organizations. We are now sort of approaching contract platforms to, offer their gig workers financial wellness solutions.
So that's B2B2C kind of thing.
B2B2C, exactly. It gives us the ability to diversify the revenue streams, really provide a serious amount of volumes of deposits for these banks and credit unions, and at the same time create a lot of impact, because I think something really mind-blowing that came out of this for me was, I can just give you the example of one gig platform that I won't mention, but they pay their users daily, and these people, 60% of these people keep their cash in an uninsured Venmo account.
Yeah.
And you can't use Venmo to pay for a doctor bill or a mechanic. And so the idea is to get these people in a community bank or credit union, so that, they're just on a path to financial wellness.
So Venmo's not FDIC?
Nope. Although I believe PayPal put in a bank charter. I don't know if it's been approved.
PayPal is so clunky. And the number one reason Venmo's great at the moment is there's zero fees.
Right, at the moment.
Yeah.
At the moment. But again, I just think about it. If all your cash is sitting in a Venmo account and you need to go to a City MD or a doctor,
yeah,
how do you pay for that?
You need a bank. You have to get into a bank so you can
exactly.
Get into them.
Or you're operating on a kind of expensive prepaid card or something, right?
Yeah.
But the idea is that, think about it. If you are one of these people that is maybe like a driver, an on-demand driver, and all your cash is sitting in Venmo, and you get a flat,
yeah,
you're kind of screwed for the day.
Yeah.
Or maybe the week, or until you can figure it out. And, the reality, I think, is income inequality is such that I don't think participation in the gig economy is going to go away anytime soon.
It's a great way to make extra cash.
And exactly. People are supplementing their income because they have to.
Yeah.
And so we need to find ways to help these people. Holy crap.
Yeah, that kind of the same feeling from that.
Get people to be slightly more stable.
Very cool. Is it iOS and Android?
iOS, Android is currently baking.
Oh my gosh. Because Android, I think, is a bigger platform for you.
Well, it's really interesting. We hear that a lot, but if you actually drill down, our users are very young. Yeah. Average age is about 23. They're all on iPhones. And if you actually look at the number of people who retain older model iPhones, it's really high.
Yeah.
Like I think it's still in the double digits for the first model iPhone, believe it or not.
Yeah. Interesting. And going to another platform really, it's good for scalability, but it could also, it's like a double-edged sword.
Right.
It's good for, you'll get a lot more people, but you'll also have a lot more technical issues to deal with.
Exactly, and we didn't want to do React or anything like that. My CTO is very...
He wants to build them both manually?
Well, he did all our business logic, I think, in... I don't actually...
Something common.
Something common, but he wants the sort of... it to be a native app.
Yeah.
Yeah.
Interesting. I don't
Whoa,
want to
sorry about that.
So I think we sort of covered everything, except for one final question, which is the most important question, unless you think I missed anything.
Nothing comes to mind, but shoot.
So I think it's the most important question, Karen.
Yeah.
Which is, how do you think you've grown as a CEO?
As a CEO, definitely way more resilient. One of the things that I don't know if this is about growth or just learning to adapt, right, is you got to roll with the punches. And you got to, top 3 things that I've learned is get to know as fast as possible. That way you don't waste your time. 2, if someone's not a good fit, they're not a good fit, and you move on, and that's it.
Yeah.
And 3 is sort of like, this is a roller coaster. So even if you have a good day, could be bad. Have a bad day, could turn out good. And you just gotta, you gotta roll with the punches.
Exactly.
Yeah.
That's fantastic. I'm so inspired by that. And I can't wait for Lifesaver to save lives and help people in the gig economy and just help people in general with, getting out of a stressful life.
Yeah. I mean, the one thing that I love about what I do today is that I do not have trouble getting up out of bed.
Yeah.
In fact, I'm like just so motivated. I mean, I've had moments where I've like honestly cried reading people's like reviews on our app and how, somebody who's never saved before is finally saving, or somebody who was like on the fence about getting like food stamps is now able to like manage. I mean, it's real.
And food stamps are getting cut like literally today.
I mean, it's
Did you read that? 1 million people.
Yeah, 1 million people. We are taxing the poorest of our society on food.
Yeah.
And I mean, it's pretty monstrous.
So there's a lot of income inequality.
Yeah, that's not going anywhere.
And we need champions like you to help out.
Yeah, and you know what? I hope that your audience, which is a good mix of startup enthusiasts and VCs and all over the place, realize that you can do good and make money.
Yeah.
These are not mutually exclusive things, and I'm really long on the thesis of that we need to help everyday people.
Yeah. Thank you, Karen, for coming on.
Hunter, thank you for being such a great sport on this rainy Monday and being under the weather and just making this an awesome conversation and a great walk.
Thank you. Boom, that's it.
Awesome.